Hey, good afternoon, everyone. David Ghai here with Kingdomminded Trading. Just posting a quick video to recap today's market action. Not sure if you had a chance to catch the weekend analysis, but at the end of each week, we look at the 1 year charts and we do a top down analysis. So, what that means is we look at all the major stock market indexes, we also look at all the sectors. There's 11 S&P 500 sectors, and then from there we also look at the dollar. We look at interest rates based on the 10-year Treasury notes. We look at the VIX, which is the Chicago Board of Options Exchange Volatility Index. So it measures volatility compared to the S&P 500 or on the S&P 500. We do that at the end of each week. That tells us what our long-term market posture is. Right now, of course, the markets are up, so our market posture is up. The market posture is always either up, down, or neutral, trending sideways. And it does that after making large gains. It'll consolidate sideways because there's people taking their profits. But then if it's going sideways, that means we have new buyers stepping in and picking up that inventory. And once the sellers are gone, it typically will resume in trending up. So in any event, this is our daily market analysis. On the daily analysis, we don't look at the 1 year chart. We look at the 3 month chart, as you can see up here. And we look at the 1 day candlesticks, these red and green icons here, or for lack of a better description, are candlesticks. These measure the high and low of the day. So if we're looking at this particular candlestick here, the high on that day was 6680.70. The low was 6555.07. So the upper shadow, that's that long stick, or called a wick, represents the high of the day. The lower one is the low of the day. And if it's a green candle, it means that it closed at the end of the trading session higher than it opened at 9:30 a.m. Eastern time. And the opposite would be true on this large red candle here. It opened all the way at the top of that body, and then it closed down at the bottom. So we look at Japanese candlesticks. We analyze the market using technical analysis. If we're investing in technical analysis, can be applied to any time frame, whether you're a day trader, swing trader, 2 days up to 20 trading days, or whether you're an intermediate term trader, 1 month up to 12 months, or if you're a long-term investor, 12 months or more. It applies to any time frame. That's the beauty of our service. We're going to teach people how to use technical analysis, apply it to any time frame, and then apply it to all types of securities: options, stocks, forex, futures, crypto. So a lot of services out there. You can go check out tradingacademy.com, find out what they're charging, and then take a look at what we're charging. I paid $26,000 for my investor education. We're making this affordable because our target market are Christians. Because bottom line is, for me, it's all about helping Christians create wealth so we can fund ministry, not only my ministry, but their ministries, and also other ministries that serve the trafficked, as an example, orphans, the elderly. For my primary ministry is to focus on eradicating homelessness in America, starting in Las Vegas. So in any event, so the first chart we're going to look at is the S&P 500. We can see here that we made a high here. We broke out of this resistance at 67.64 last week on the 24th, or I should say Friday the 24th. Went up for a couple days and then went sideways for 1 day, pulled back, and now it's sideways for 3 days. These are all red candles. So what that tells me is, this is not a market I'm going to be too aggressive on at this point. I expect to see a pullback, although with that said, it's not doing it yet. So it could reverse and go up tomorrow, but in the meantime, I'm going to be very selective in terms of buying stocks or buying options on stocks until I see a confirmation that the market as a whole is moving up. Right now, we don't see it. And so that's the S&P 500 market. So the 3 month trend is up. That's a positive. But the short-term action is sideways, so we'll see what happens. The Dow Jones Industrials, very similar, broke out on the same day, and now it's basically on a 4 day pullback. And usually what we look for are 2 to 5 day pullbacks, and then we look for an opportunity to get back into the upside. So that's a bearish candle, but it does have a long lower shadow, so perhaps we might be at support. We'll have to see tomorrow. The Russell 2000, these are the small caps. That's on a 6-day pullback. There was a bull flag set up. That was a positive candle we saw on Friday. And had it gone above that today, we would have an opportunity to get back into the uptrend and trade up to the last target or even higher. So depending on how we want to trade it. So the bullish sign here is that is a hammer candle, which is a bullish sign, and it is above this moving average there, the 30-day moving average. So that's a positive. So far, it's holding that. The composite, just like the other indexes, it's weak. I mean, on a short-term, 5-day trend, we're going sideways with 4 bearish candles in a row. So not too excited about getting aggressive on the market today. And, last week I posted an article about gap ups. This could be what's called an exhaustion gap. That's where the market opens way above where it closed the prior day. We had that this day, 3 days in a row, actually 4 days in a row. And now we're basically at best sideways to down slightly over the last 4 days. And so I would love to see this pull back, down here to some support levels so we can get some really good, better opportunities. Semiconductor index, that's not a major index, but it's, obviously a major component here of technologies. And so very similar to the other indexes. The Nasdaq 100, that's my primary watch list. Very similar. And then volatility was trending up for 4 days here, but then today was a pullback day. So we'll see what happens tomorrow. If it does pull back, we can expect the markets to continue on the upside. So the indexes overall, we're on uptrends on all the indexes. The volatility is pulled back. Those are all positives, but we do have a lot of bearish candles and maybe mixed signals, I would say, over the last 4 or 5 days. And then we'll look at the sectors. These are the 11 S&P 500 sectors. So we have 11 sectors, and then we have 197 industry groups. So let's take a look at the first one is XLB, basic materials. That's on a three-month downtrend. So that's not something I would be, if I wanted to trade the XLB, I could trade the exchange traded fund, which trades like a stock does. So there are shares you can trade on this. But I don't trade something trending down for 3 months when the overall market is up. I'm looking for uptrending securities. Communications, 3-month uptrend, but since making these highs back in September over the last 6 weeks, we're down. We are at a potential support area, but I would want to see a reversal before I'd do anything on if I was to buy this. Now, with that said, there might be stocks within the communications sector which are outperforming and very solid. So, but overall, what I do is I try to pick the best sectors and the best industry groups. Energy, 3-month uptrend. But it's resisting this 30-day moving average. And so it's not been able to break above that. It's tried 4, 5, 6 days in a row and just hasn't been able to do it. So probably as a result of the overall market. Financials, if we look at where it closed 3 months ago, it closed at 51.91. Today it did close higher than that. So technically it's slightly up, but obviously very ugly, not something I would be looking at. Industrial stocks, a little bit stronger, but I wouldn't be trading this. But technically, you could say it's a bull flag setup, but it's not something I'd be looking at. Technology stocks are going to be the strongest sector. If the chart comes up, we'll go back to XLP. That's not coming up. All right, so we're having a data issue. Let me go to some other charts. Let's see if any of our gold or silver come up. All right, so I'm probably going to have to log out and log back in. So I'm going to stop this video here and I'll pick it up where we left off.